What is a stock, really? When most people hear the word stock, their minds immediately jump to confusion. Numbers flashing on screens, charts that go up and down, and brokers shouting in a trading pit. Some even think of it as gambling, a game only experts can play. But in reality, stocks are far simpler and more powerful than most people realize. They are not numbers. They are ownership in real companies, and understanding that is the first step to building wealth. Let's begin with a simple metaphor. Imagine a company as a pizza. The entire pizza represents everything the company owns: its buildings, products, patents, employees, and even its reputation. That pizza has value. Now, imagine slicing the pizza into many equal pieces. Each slice is a share of stock. When you buy a share, you buy a slice. You literally own part of the company. That ownership gives you a claim on profits, assets, and growth potential. Think about your local coffee shop. They want to open a second location. Instead of borrowing from a bank, they sell slices of their business. If you buy one, you are now a part owner. You don't make coffee, hire employees, or manage operations, but you share in the success. If the expansion goes well, your slice becomes more valuable. You participate in the upside without doing any of the work. Now scale that idea up to a giant like Apple or Amazon. You don't design iPhones or manage warehouses, but owning a single share connects you to the company's growth, profits, and innovation. Even a tiny slice matters. Pause and reflect. Imagine that, owning a piece of one of the largest companies in the world without running it. That is the power of stocks. They let ordinary people tap into extraordinary businesses. Let's dig deeper. Stocks do not just give you ownership, they give you potential for growth. If the company grows, your slice grows. Imagine Tesla 10 years ago. Owning a share then was like owning a small piece of a company destined to become a leader in electric cars. You didn't build the factories, hire engineers, or design vehicles. But as Tesla expanded globally, your tiny slice increased dramatically in value. Stocks sometimes pay dividends too, cash paid to shareholders. Think of it as tasting the pizza before selling your slice. You get a reward for holding ownership while your slice continues to grow. Here's another analogy. Stocks are like joining an exclusive club. You don't need to run the club or plan the events. You just enjoy the benefits of membership. The companies you invest in are this club. They innovate, create, and grow. Your slice connects you to their success. Let's make it even more tangible. Imagine Apple again. Boing. When you buy a share, you participate in everything the company does. Product launches, software updates, global expansions. You are not managing anything, but you share in the upside. You are invested in outcomes, not tasks. Now let's reflect again. Close your eyes for a moment. Imagine holding your slice of pizza. It grows as the company grows. You occasionally receive rewards. You are part of something bigger than yourself without doing the day-to-day work. This is exactly how stock ownership works. Stocks also provide flexibility and choice. You can hold them for decades, letting them grow, or sell and reinvest elsewhere. You control your participation. The slice is yours. The key is understanding that your share is not just a number. It's a claim on a real business with real assets, employees, and profits. Think about a startup that creates a revolutionary app. Early investors buy shares. The app becomes wildly successful. Those early investors don't run the company. They watch it grow. Yet they share in the financial rewards. Public companies work the same way on a larger scale. Let's expand further. Stocks are also about timing and compounding. Even small investments can grow exponentially over time. Owning a slice of a growing company allows your wealth to increase steadily, year after year. Think of it like planting a tree. You water it, give it sunlight, and over time it grows into a large tree bearing fruit. The same happens with shares. Your initial investment can multiply as the company expands. Another story. Imagine a small tech company that develops a groundbreaking software tool. You buy shares early. Over the next decade, the company becomes a household name, innovating and creating value worldwide. You didn't design the software, but your slice grew in value because you were connected to the company's journey. Stocks are powerful because they turn ordinary people into part owners of extraordinary businesses. You don't have to work 80 hours a week. You don't have to invent a product or hire employees. You simply own a slice and let the company do the work for you. Finally, remember this. Stocks are not gambling if you understand what they are. They are ownership in real businesses with real products, employees, and revenue. Each share is a slice of the company. Each slice has value. And when the company grows, so does your slice. Picture your slice of pizza growing, expanding, becoming more valuable. That's stocks. Simple, powerful, and accessible. And this is only the beginning. Own a piece, not the work. Now that we understand that owning a stock means owning a slice of a company, let's explore the truly remarkable part. You get all the benefits without the daily responsibilities. Imagine holding that pizza slice again. You enjoy it, but you didn't make the dough, chop the toppings, or heat the oven. Someone else did all the work. You simply reap the benefits. That's exactly how stock ownership works. When you buy Apple stock, you don't have to manage engineers, design products, or run stores. That's someone else's job. You benefit from their work without having to lift a finger. Your share gives you a claim on the company's profits and growth. You own the outcome, not the day-to-day tasks. Think of it like owning part of a championship sports team. You don't train, practice, or coach, but when the team wins, you share in the victory. You leverage the skills, talents, and efforts of others. That's the beauty of stocks. You can participate in success without doing the work yourself. Pause and imagine this. You own shares in Amazon while you sleep. Employees are packing orders, software engineers are writing code, and executives are making decisions. You are not involved in any operations, yet you share in the financial upside. That's leverage. Your money works while other people do the work. Now, consider risk. Stocks are not risk-free. If a company struggles, say, sales drop, or a product flops, your slice may decrease in value. But here's the important part. You're insulated from managing the problem. You don't have to figure out why a product failed or solve operational issues. Management does that, while you continue to own a piece of the business. Let's expand this further. Owning stocks is like renting a hotel room in a 5-star resort. You enjoy the luxury, the amenities, the comfort. But you don't own the building or run the hotel. You benefit from the work of others, without the responsibility. Stocks operate in a similar way. You participate in the company's growth without being on the front lines. Think about innovation. If you own Tesla stock, you don't design electric cars, secure battery technology, or build factories. Yet, as the company grows and captures market share, your ownership slice increases in value. You leverage the efforts of thousands of employees and world-class management teams. Another analogy. Stocks are like a passenger on a train. The train, the company, is moving toward growth, and the engineers, the management, are driving. You are on board. You benefit from the journey without having to push the train or lay down the tracks. Your investment grows as the company moves forward. Let's look at dividends again. Some companies pay shareholders cash regularly. This is like receiving a small bonus for being part owner. You didn't work for it. You just held your slice while the company performed. Over time, dividends add up, and they can be reinvested to grow your slice even further. Pause again. Imagine your portfolio like a garden. Each stock is a plant. You don't have to water every single plant personally, but you tend to them by investing and holding. The garden grows. Some plants bear fruit quickly, others slowly, but with patience, you reap a harvest of wealth. Let's expand further with real-world examples. Suppose you invest in Apple, Microsoft, and Amazon. You don't run their operations. You don't create their products. You don't manage logistics. Yet, as these companies release products, innovate, and grow revenue, your slice grows alongside them. This is wealth creation without running a business. Pause and reflect. Owning stocks is one of the few ways ordinary people can leverage the efforts of some of the smartest companies in the world. You participate in innovation, growth, and profits, all while focusing on your life. You don't need to be an entrepreneur, engineer, or executive. You just need to understand what you own and hold it wisely. Now let's layer on long-term thinking. Stocks compound over time. The longer you hold, the more value your slice can accrue. You are using time as your partner. Unlike running a company, which requires constant energy, owning a stock allows your investment to grow while you sleep, work, or spend time with family. That's a unique and powerful advantage. Finally, remember this. The magic of stocks is ownership without responsibility. You share in the company's growth and innovation, but you are free from day-to-day management. That's why stocks are considered one of the most powerful tools for building wealth. Pause one last time. Imagine sitting back, enjoying the fruits of a business's hard work, watching your slice grow and knowing you didn't have to build it yourself. That's the essence of stock investing. Now that we've covered what stocks are and how they allow you to own a piece of a company without running it, let's bring this to life with a real-world example. Imagine Apple. Suppose you bought a single share 10 years ago. Back then, the iPhone was relatively new, and Apple was growing steadily. Since then, Apple has launched iPads, Apple Watches, AirPods, and expanded into services like iCloud and Apple Music. Its global presence has increased, revenue has soared, and profits have multiplied. By simply owning one share, you were able to participate in this massive growth. You didn't design products, manage operations, or lead the company. Yet, your ownership slice increased in value as Apple succeeded. That is the power of stocks. You are connected to a company's growth without doing the work yourself. Now let's expand this example further. Owning one stock is powerful. But most investors don't stop there. They build a portfolio, a collection of stocks across multiple companies and sectors. Imagine a pizza box with slices from several restaurants. One slice is Apple, another is Amazon, another is Tesla, another is Microsoft. Each slice has its own flavor, risk, and growth potential. Together, they form a complete meal. This is the concept of diversification. If one company struggles, the other slices can balance it out. Over time, a well-diversified portfolio grows steadily, even when some individual stocks underperform. This is one of the key principles of long-term investing. Think of your portfolio like a garden. Each stock is a plant. Some grow quickly, some slowly, some may even wither temporarily. But with patience and care, buying wisely, holding for the long term, and reinvesting dividends, your garden flourishes. Over years, small investments compound into significant wealth. Pause and reflect. You now see why long-term investing works. It combines ownership, growth, and time. The longer you hold quality companies, the more your investment can grow. You leverage the hard work, expertise, and innovation of some of the most successful companies in the world. Let's consider another example, Tesla. Suppose you invested in Tesla in its early days. The company faced challenges, production bottlenecks, competition, and skepticism from the market. Yet, you didn't have to solve those problems yourself. You simply held your shares. As Tesla overcame obstacles, launched new products, and expanded globally, the value of your shares increased dramatically. That is, ownership without responsibility in action. Now let's layer in dividends and compounding. Some companies pay dividends regularly, giving you cash payouts just for holding shares. You can reinvest those dividends to buy more shares, compounding your wealth over time. Even small amounts can grow into a substantial sum over decades. This is the magic of long-term investing, combined with disciplined reinvestment. Another way to think about it is time as a partner. Stocks reward patience. Unlike running a business, which requires constant effort and energy, owning a stock allows your investment to grow while you focus on your life, career, or family. You are leveraging both the company's growth and the power of compounding interest. Let's expand on the concept of participation. By owning shares, you are part of the company's story. You benefit from innovation, product launches, and global expansion. You are connected to the successes of some of the world's most influential businesses. And the best part? You don't carry the responsibility of managing employees, solving operational problems, or making strategic decisions. Here's another perspective. Owning a diversified portfolio is like holding tickets to multiple performances. Each company is a show. You don't have to act, direct, or stage the performance. You simply attend, enjoy, and benefit from the success of the show. Over time, with careful selection, your ticket collection grows in value. Pause for reflection. Imagine looking at your portfolio years from now. Each stock has grown, dividends have been reinvested, and your initial investment has multiplied. You are reaping the benefits of ownership, growth, and compounding. You are part of something much larger than yourself, without running a single company. Finally, let's summarize the key lessons from this slide. Stocks allow you to own a slice of real companies, giving you a claim on profits and growth. You can participate in success without managing the business, leveraging the efforts of executives, engineers, and employees. Building a diversified portfolio spreads risk and increases long-term stability. Long-term investing and compounding turns small ownership stakes into significant wealth over time. Thinking of stocks as ownership, not numbers, allows you to approach investing logically, confidently, and strategically. Pause and reflect again. Imagine your slices of Apple, Tesla, Amazon, and Microsoft. Each is growing, each is compounding, each is building long-term wealth for you. That is the power of stocks. Remember, the goal of investing is not short-term excitement or speculation. It is long-term participation in the growth of businesses you believe in. By understanding stocks in this way, you shift from fear and confusion to clarity and confidence. You learn to see the real opportunity, a chance to let your money work for you, quietly, steadily, and powerfully over time. Finally, take one more moment. Imagine the next decade. Your slices of these companies have grown. You have participated in their innovation, expansion, and success. You have leveraged their work to build your own wealth. That is the essence of smart investing: ownership, growth, and patience. Stocks combine all three: ownership, growth, and time into a single, powerful wealth-building tool. And that, ultimately, is why investing in stocks is one of the most accessible, effective, and rewarding ways for everyday people to build long-term financial security.